Hello learners, welcome again to Manifested e-learning platform. Today we are going to look at our next topic, that is tax planning. Tax planning. And in this particular topic, we need to equip ourselves with the knowledge on how we can reduce our tax obligation. So we are saying, how can we plan so that we can minimize the tax burden? Tax planning is a legal practice. It's not an illegal practice, and it does not have elements of tax evasion. Therefore, because it is accepted by tax laws, so we are supposed to take that particular advantage and we reduce our tax burden. In our country, or in a number of countries, depending on the tax system that is put in place, there are various tax planning techniques depending on the revenue authority of that particular country. Like in our country, Kenya, we have a number, as we are going to see also later in our session. Now, there are a number of topics, subtopics that we are going to cover in this, and we will start by highlighting some of these particular subtopics. Then at a later date, we analyze or we discuss one after the other. Our first subtopic will be number 1, taxation. Sorry, that is tax planning. Tax planning for individuals. Tax planning for individuals. And in this particular case, we need to understand how an individual can reduce his tax burden. An individual is like me or you. So how can we minimize our tax burden without violating tax rules and regulations? That is what we'll discuss under these particular taxes, under this particular topic. Number 2, we are going to look at how to mitigation of direct and indirect taxes. So how can we minimize the effect of both direct and indirect taxes? Direct taxes are simply those taxes whereby the impact and the incidence are on one person. A good example is like pay as you earn. Pay as you earn is a good example of direct tax. Indirect taxes are like VAT, and these are those taxes whereby the tax impact and the tax incidence are on different persons, meaning they are imposed on one person and the final resting place is another person. That is a good example. So VAT is a good example of indirect taxes. So because we are covering tax planning, we need to see how we can reduce the effect of these particular taxes and how we can do it in a way that we are not engaging ourselves in tax evasion. The other subtopic will be evaluation of remuneration package. Evaluation of remuneration package. In other words, how can we evaluate a job? Like for instance, you can get a job or 2 job offers at the same time. So how can you evaluate the two and you select the best? So that is what we'll discuss in this particular topic. The other subtopic that we are going to cover is tax avoidance and avoidance measures and avoidance measures. So we will get to understand what is tax avoidance and which are those cases whereby you can engage in tax avoidance and KRI say no to such particular practices, because tax avoidance is also a professional way of reducing the tax burden. But the taxpayer does not have a final say. There are those tax avoidance practices whereby KRA can say no to some of those particular practices. So that is what again we are going to discuss on this. The other area that we are going to check, number 5, is about tax incentives. Tax incentives. And like now, in different revenue authorities, we have taxpayers who are existing, and we may also want to get new taxpayers. The government may want also to have new taxpayers in the system. But how can we attract these new taxpayers? We can manage to attract them through tax incentives. So we give them tax incentives, as we are going to see later, the types of the incentives which are meant to attract them so that they can join the tax system. We'll also discuss disposal, number 6, disposal of business operations. Disposal of business operations. So sometimes we can be having a business that is which is operating, and we may want to dispose that particular business as a going concern. So how can we handle tax matters in that particular case? We will see in this particular subtopic the responsibilities of the seller and the buyer regarding the tax matters. What are you supposed to do regarding the same? The other one, number 7, we also have CESA. CESA means Special Economic Zones Act. Special Economic Zones Act. Special Economic Zones Act. Now, special economic zones, we have those zones whereby the government has offered some tax incentives, such that if an investor invests in such areas, you will find that maybe your tax burden tend to be a bit lower. So you will understand again in this area what CESA means and some of the benefits or value it has added to our economy. And the last one, we'll look at number 8, tax risks. Tax risks. We need also to know what do we mean by tax risk. What are tax risks? So, and you'll see that a tax risk is a situation whereby or is a chance that a tax that is supposed to be paid may not be paid, or the persons may not comply with the tax system. And these persons may comply through paying tax. They also comply through maybe like filing of tax returns and such. And therefore, through tax risks, we will see now what are these risks, what can arise in the process of dealing with the tax matters. So learners, I would like us now, having completed the areas that we are going to cover, let's see the first topic, which is tax planning for individuals. Tax planning, planning for individuals. Tax planning for individuals. This is our first subtopic, tax planning for individuals. In other words, we are asking ourselves, as individuals, how can we reduce our tax burden?